We should be live now. Good evening to everyone who's watching us. Hello to London. I believe you're in London, Nic, right?
I am indeed in London, yeah.
Super. So hello from Moldova to UK. Very nice talking to you. Thank you very much for accepting the invitation to talk to us. This is just to make a bit of an overview what is going on here online. This is the third time actually we are speaking to an investor online. It's the first time speaking to someone from UK. The first two people we spoke to were from US. What are we trying to do here is trying to give to the community of startup founders from the Republic of Moldova a bit of insight and perspective. How does it work, the cooperation with investors, specifically with venture funds? How can they reach out to them? Is it possible, impossible for Moldovan startups at the early stage to get some financing, some support from international funds? And how does it work in general? Because for sure you have a lot of experience. I was going actually through some of the numbers in the report from Forward Partners, from the organization that you have, as far as I understand, you have as well founded your organization and you are the CEO of it. So like, I'm sure that you know all of the details of like how does it work. So I'm representing Startup Moldova Foundation. We are a private organization from Moldova. We are a young organization from Moldova, as well as the community of the startups here is. What we as an organization are trying to do is to serve as a bridge for the local startup founders to the international resources, mentors, investors, trying to support them with resources that we have for them to reach for the stars and to have hopefully one day the first unicorn made in Moldova. If I would really appreciate if you could tell us just a couple of words about yourself and about Forward Partners.
For sure. So I'm Nic Brisbourne. Thank you for having me on the show. Much appreciated. So I started my career in venture capital in 1999, actually. So I was a young man back in those days, and it was the kind of the white heat of the first internet bubble. And I was working at a startup in London that was going sideways. It was like, they were lovely people, but the company was 30 people when I joined in 98. It was 30 when I left in 99. It was 30 about 10 years later. They're 60 now, and it was fine. But it was clear I wasn't going to make my millions there. And so I thought, okay, where do I go next? And I thought, I've been a management consultant before, and the consulting experience plus the startup experience I thought would be a good fit for venture. And I networked around and joined Reuters Venture Capital, so corporate venturing. I did that for 4 years, and then left to join what was Cazenove Private Equity and became a founding partner there in ultimately what is now Molten Ventures, one of the kind of what I think is the largest listed venture firm here in the UK. And I left there in 2013 to found Forward Partners. And so at Molten, we did Series A, bit Series B investing. You know what I mean by Series A and Series B, yeah? There's no
Yes.
that. But we didn't really do seed. There were not many seed investors in the UK, and thought, okay, there's a big opportunity to make a seed investor. And also, I was really interested in the idea of building a high value add firm. So at that point, you could look in the States and see the beginnings of an emerging trend to offer more value as an investor, to actually employ people in your management company to work for your portfolio companies. And so you can see Andreessen Horowitz, first round capital a bit, OpenView Venture Partners, one of the pioneers actually, Project A in Germany. And so I thought, okay, let's do those two things. Let's set up a pre-seed and seed stage fund and operate a high value add model. So we got going with that in 2013, largely backed by a high net worth to start with, a guy called Neil Hutchinson. And then BlackRock became an investor in 2017. And for those first two funds, we were a traditional GP LP structure. So that's the traditional legal structure for venture firms, where the investors invest in a 10-year vehicle called a limited partnership. And then there's a management contract called the general partner. That's the GP bit of it, which is where the VCs all work. So we had that traditional structure. And then last year, we changed to an IPO structure, became a listed venture firm, and so we collapsed the funds onto our balance sheet, and our capital became permanent, and that's what we do now. So that's a bit my history and a bit how we got going with Forward. And what we do at Forward is still pre-seed and seed stage. We still operate a high value add model. So we have an agency effectively that we run on behalf of our portfolio companies, and talent is the big focus. So as an early stage business, working with recruitment firms is really hard. There's a real inefficiency in providing talent services to early stage startups. And so kind of we step into that to help our portfolio companies to find the people they need to grow. It's what you've seen consistently in surveys of entrepreneurs over the years. Always the two hardest things are access to capital and access to talent.
Interesting. Okay.
And finally, to the last bit, so we operate a sector-focused strategy. And so for new deals now, we're looking for applied AI companies, marketplaces, and Web3 businesses, particularly applied Web3, not kind of pure play inside the Web3 ecosystem, but using Web3 technologies to solve real-world use cases, and still doing that at pre-seed and seed stage.
Super. Somehow I don't know exactly the numbers, but somehow I get the feeling, and I've been listening to this on various presentations, that usually the VC companies are not profitable, that these are investments that don't usually turn into profitable investments. And in your case, I was going through the report you have published on the website for the previous year, and the company is quite profitable. What do you think is your, maybe you are more risk averse, maybe you are more careful with your investments. How did you manage at this point to make a company that is profitable in risk capital investments?
So I think we have to distinguish here between Forward Partners and the companies that we invest in. So Forward Partners is profitable.
Yes.
Forward Partners is profitable because the value of the investments that we make keeps going up. But the underlying companies themselves, some of them are profitable, but not many. And so we're taking the same sort of risk as every other early stage VC, highly loss-making businesses that intend to stay loss-making for, 5 years or more. And we expect a high failure rate. So our models have half of our investments failing completely, and only a sixth really having a lot of success. And you were asking about how venture capital works, and you may have heard this from previous guests, but the venture capital model is all about finding outliers. The top 15% of our portfolio, that's what we project succeeds, and we project that they succeed really, really well.
But 1/6, I don't think it's that bad actually. I think it's a quite good number, because it then can pay off for all of the other investments. Like I was thinking more of like, for sure, less than 5% of the investments are turning into something profitable and like.
No. So at Molten Ventures, our model was a third rather than a sixth. But if you're investing at Series A, Series B, then maybe a third is what you should target. Because we're earlier stage, pre-seed and seed, we target a sixth. But like if it's only 5%, then then your successes have to be such runaway successes that it starts to become difficult.
Yeah. Okay. And I was also looking at the amounts of the investments that you made into your companies, and they seem to be quite high for the early stage investments, or at least that's the feeling I got, because many of them are exceeding £1 million, which is already a quite significant amount of investment. That is part of your strategy, so you are mostly investing into companies that you can value already at that amount of the company.
Well, so that's changed over the years. So what's happened in the UK market and America is the same, and I imagine Moldova will follow the same trajectory, but it will just take some years probably before you get there. So when we first started, so 9 years ago, at that point we were investing, kind of our biggest investment in that first year was probably, remembering back, £600,000-700,000, something like that, and a lot of them were 100,000, less in some cases. But what's happened in the UK is that as the market has matured, as funds have got bigger, as competition has increased, then founders are raising more money for their companies at higher valuations, still at the very earliest stages, and then they're just growing more aggressively. And so, I mean, like it's surprising sometimes the most. I'm just trying to think what's public information here. I was about to share details on one of our portfolio companies, which I shouldn't. So, but it's not uncommon to see, certainly last year, less of that this year, but not uncommon to see businesses. And this is an example this year, actually. There were kind of 3 founders from one of the top name sort of global fintechs. And they raised money for their startup at about a £20 million valuation when they hadn't even got any code yet, just slides still.
Wow.
Yeah. That's an extreme example. But common, common at the early stages is a few million certainly. But like usually when it's pre-seed, pre-launch, very very early, then you're in the kind of single digit millions. So we might invest 500k, might get 10%, and then for a seed stage business, the last couple of years it's been more like 10 million valuation. We put in 1 million, get 10%. Valuation coming down a bit now, but that's the sort of pattern.
Okay. I'm just trying to imagine how was it for you at the beginning, especially when you founded your own company? Was it for you something like you couldn't sleep at night because of this one company that you invested in, like what's going on with them? Were you watching it closely as opposed to now where you have in your portfolio a couple tens of investments, if I'm not mistaken, like at least 20 or something like this? Like how do you approach every single of your investments? How much invested are you personally into it?
So I'm very, very personally invested into Forward Partners, and you're right that in the early years, so we inherited some investments that our initial investor made. So we got to a kind of portfolio of 15 companies very quickly, but. But within that portfolio of 15, there is only kind of 2 or 3 that were kind of far enough along that, I was like, okay, we've got a good chance of success with these businesses. And so I was, like, I had a very close eye on those 2 or 3. And if one of them, which, like, what it's like, all startups kind of like, and
Yeah.
when they had one of their down or flat periods, then I was like, and now we actually have 48 active companies in the portfolio, and so we're much less indexed to anyone. But still, if you look at our valuations, there's a couple that kind of stand out at the top end, and so I have more eyes on those than the ones further down, of course.
I see. Okay. I saw in one of the slides in your report the statistics that you get per year plus minus 4,000 pitches or applications. So it's like that's a quite significant number. So then you have to narrow it down to, okay, which ones do you meet? Which ones do you go in depth to review? How does that process look like? Like, do you have, I don't know, a bunch of people that do only evaluation of these applications, or is it one person, or is it just yourself? I don't know, like how does this work?
Yeah. So we have a team of people who are evaluating the 4,000 plus deals that we see each year, and we look at every single one, but you can't spend that much time with 4,000 investments, and so the initial review needs to be quite fast. We make the initial review, and then the same team that does the initial review then does the first meeting. So the rough numbers are 4,000 approaches. We do 400 first meetings. We get serious with about 40 of those, and then we invest in 4 to 8. So we're investing kind of 0.1 to 0.2% of the deals that we see. And what's often a bit surprising, and this is worth noting if there are kind of entrepreneurs listening here, is that when a venture firm gets serious with you, when they've been talking with you, maybe had 2 or 3 meetings, in our case, that's maybe 40 a year, but you've still only got a 10 to 20% chance of getting an investment from us. And so it often appears to founders that they've got a higher chance of success than they have. And I've been on the other side of this. It's exactly the same when I've been a VC pitching for investment into our funds, and you've been talking to people for what seems like a lot of conversations, and then they say, yeah, well, you're one of 5 now, and you're going, oh, really? So that's the funnel, and the way the process works. The investment team do the initial review and take the first meeting, and then everything that goes through first meeting gets discussed in our weekly deal team meetings, and we decide which of those go to a second meeting, and we start doing due diligence at that point. So sometimes we go straight to a second meeting. Sometimes we think, oh, okay, this is interesting, but we're not sure about, I don't know, say market size. So then we do some due diligence, do some research of our own, ask the founder some questions about market size. And if we get good answers to those, then we have a second meeting. And, that process, sometimes it's very fast if it's all very clear. Sometimes it takes a long time if the founder's not in a rush or there's a lot of stuff that needs to be worked through. And then after we're doing that for a little bit, might do a second meeting, and then the final stage before term sheets, the third meeting. That's when I get involved now, and I'm probably doing, probably about 30, 40 of those meetings a year for the 4 to 8 investments that we're making.
Mm-hmm. That's very interesting. That's one of the things that we've been discussing as well with other investors, and they were telling us is about the patience thing. Is that if you don't get a reply, or if you are just asked for more information and this is being already handled for more than even half a year, it still doesn't mean that it's a no. It still doesn't mean that you might not go further and receive the investment, but it just takes a lot of patience in the time, in the process to get through, to get screened, and there might be so many other things in the background that you just simply might not know as a founder, as a startupper. That the VC doesn't mean that they don't like you or that they don't consider you. It's just not yet the right moment for it.
That can be true, definitely, but it isn't always. I think one of the tricky things for founders to judge is what VCs are thinking, and therefore how much to follow up, how much to keep trying, because sometimes you get the situation which you described where the VC just hasn't managed to pay attention yet, and then it's just a question of trying to get them to pay attention. And then other times you've got the situation where they've paid attention and they are, they probably haven't quite decided that they're not going to do it, but they, keep deprioritizing it, keep finding more exciting things to work on. And as a founder, you don't want to spend too much time, you don't want to focus your time there, right? Because your chances of success there in the short term are not high. You should always be polite. They might always invest later, but trying to assess whether they basically decided not to do it, even if they haven't told you, versus haven't really thought yet, is part of the art. But you can see, basically, if you've, what's the best way to quantify this, to think about this? So if you've met with a VC and they're not following up with you, then after a couple of polite follow-ups, you can probably figure that this isn't a deal that's likely to happen. If you haven't met with them, if you haven't had any kind of reply, then you might think, okay, look, this has just fallen into the pile of emails that hasn't been seen, and look for other ways to get in.
I see. And how does it work for you? What I get the sense of from this discussion is that you have a more analytical approach to selecting the companies you're going to invest into, because you really have large funnel. You have a lot of applications from the beginning, as opposed to, for example, a fund that we've been speaking a couple of months ago from US that was saying that they are usually investing into the companies that they hear or meet at certain events, or it's a referral from someone. So it's more of a one-to-one approach, and then you are just going to different events, you meet the companies there, you see them pitching on stage, and then you kind of approach them. So in your case, it's more like, as I was saying, like more analytical, that you are just getting so many applications that you already have so many to choose from that you don't need to go out and search for the best investments.
So we're definitely out working hard to find the best investments. And so within that 4,000, there are lots of referrals. And if you get a referral from someone we know, then, that's one of the better ways of increasing your chance of getting a first meeting and starting to move through the pipeline. So that's very much part of our model. I don't know what stage. So the other thing that's different is when you invest very early stage, so pre-seed and seed stage, then going to events to meet companies is much less efficient than if you are investing at a kind of Series A, Series B, when already there's just far fewer startups in the market. If you know the sectors you're interested in, you go to the right events dedicated to those sectors, and you can meet all the companies, or nearly all of the companies that might be relevant for you quite quickly. So it may be that they're more of a later stage investor than us.
Okay. And does it matter for you if the startup has already attracted some investments before you, or are you completely okay to be the first one to invest?
Yeah, we're very often the first one to invest, but we don't mind. We don't have to be. What's important is that the founder has enough equity, or the founding team, the management team has enough equity after we've invested that they continue to be incentivized, and when we project forward after a couple more rounds, if they raise a Series A and Series B, will they still have enough equity? So we do see some cases where they've taken money, but the early investors have taken such a big slice of the business that kind of stops working for everybody else.
Interesting, because some of the companies, when they are investing, they want to get a bigger share of the total pie to just make sure that they are controlling it. But I believe that, especially if you are at the very early stage of the company, then you should make sure that the founders and the founding team is super enthusiastic and still very interested to make sure that it's up and running. And somehow this leads me to the next question that usually is very somehow vague, and I know the possible answers, but still, what do you think are, from your perspective, the most important things that can make an idea to be selected for investment? Is it the numbers? Is it how good the idea is? Is it the team? Is it the one person? Maybe that's what can win your trust. What are you looking at in those 40 meetings that you have per year?
Yeah, so 4 things we always say. So product, market, team, and momentum. So taking each of those in turn. So it's super important that there's a compelling product idea here. And at Forward Partners, we're very focused on fundamentals generally, and with regard to product, that means understanding what the use case is, who's going to use this product, what they're going to use it for, what problem it's solving, how much of a priority that problem is. It's amazing the number of businesses you see that are solving a problem, but they don't succeed because the problem isn't kind of near enough the top of anybody's list. It's just kind of, so what problem you're solving, what priority it is, if people are going to pay for it. So if it's, like an e-commerce business or a service, if people are going to pay for it, where that money is going to come from, because, people are not going to suddenly kind of use their savings in most cases to buy a product and so on. So then, you've got to understand that acquiring this company's product is going to be a lot more valuable than whatever they're spending the money on at the moment. So we look at all of those things. We look at the market. So is it a big market? Is it big enough to get us the returns we want? We like to, we project forward and think in a success case, we can get at least £50 million back from each of our investments. And there, we look bottom up, how many customers are there in this market? What might they pay for this product? And therefore, like if we have a kind of, 10% market share, that really varies by market, depending on competitors. But say if you have a 10% market share, is that going to get us to enough revenues to drive a really big exit? And, what are enough revenues? Well, that really depends on what the market is, how profitable the business is going to be, what sort of multiples you might get. But, we think through all of that stuff on the market. We also think through how competitive it is, what the margin structure looks like. Is it a market where you can build a profitable business? Some markets these days are so competitive that it's just, unless you have massive scale, it's really hard to get to profitable. We also like new markets that are fast growing. So, very often there's a big market and you can look at how that market is being turned on its head, and a new sector is just growing market share over time. So a classic for us for many years was we were investing in e-commerce businesses, and I'd give this example. It's easy to understand. You could look at a market for, discount retail, online for discount retail. So we have these businesses in the UK that go by the name of Poundland, things like that, where, they've just got lots of things that you can buy for £1. That business wasn't meaningfully online at all. And so we invested in a company called Cherries, which, so it's in overall the discount retail market in the UK is a few billion, but the online portion of that was very small and very fast growing. And so, okay, let's invest in that. And as that market grows, if Cherries is the market leader, then that has a lot of strategic value. And then Team, so they're looking mostly at the CEO, the pre-seed and seed stage. If they've got strong supporting team members, then that's obviously a big help. But you need a strong CEO, and there we use a framework thing we've developed internally called KIDDLE to assess everyone in the management team, but principally the CEO. So are they, so it stands for competence, insight, drive, and leadership. And so we're looking for, and again, we have kind of a bunch of things that we look for evidence for all of those, but it's quite intuitive. And then momentum. So if business has sales, then we like to see that it's growing. Often you get approached by companies where sales have been declining or are flat, and then they say, but once I raise investment, then suddenly I can grow. Those are difficult. Those are much more difficult to back, because giving money to a company to keep doing what it's been doing is much less risky than giving money to a company that then is suddenly going to change. So I'd like to see that momentum in sales, or if it's pre-revenue, then you look for other signs of momentum. Are they building? Is there momentum in their social media presence, in the way their team's growing, things like that.
So even the social media presence, you are even checking that, yeah?
Yeah, definitely. And it's relevant in different ways for different companies. But yeah, building community is one of the most important ways of, one of the most important go-to-market strategies these days.
Super. That's very interesting. That's very nice as well, because it shows to the founders, to the entrepreneurs, that they really need to take care of the whole, the whole bubble, the whole ecosystem around their product, not just sitting in an office with 1 or 2 people and just working on their laptops on something, but actually being open to the community where they are, and including one of the things we're doing at Startup Moldova, not that I want to promote it that much, but this gives me just a bit more insight that this is useful, is what we are doing is that once in a while we're publishing an interview with each of the founders about their startup. And we were trying to explain that even though simple interviews that we are posting online, someone one day might just Google your name or the name of your company, and just seeing that there are more appearances online, that you are really serious about it, and you are serious about it not from a week ago, but from a couple of months ago. This gives you even more credibility, as opposed to the founders that even come to us as just a community building organization, speaks to us and then gets disappointed, for example, that they don't get a grant, and then within 1 or 2 weeks they completely disappear and they vanish as if they've never been even interested in building into a startup. So this is also showing you like how consistent you are in time, how patient you are in time to build your startup, because you cannot just expect that it's going to explode within 1 or 2 months. Like, fingers crossed, maybe for somebody this is happening and this will be happening, but it just really takes a lot of patience and a lot of attention, investment put into everything around your idea, building the community, social media platforms, giving interviews, going to conferences, just being present everywhere. And like, by this, building your company, not just the product itself.
Yeah, very well said. I completely agree. So I said, we assess founders on the basis of this framework KIDDLE and competence, insight, drive, and leadership. And part of drive is definitely tenacity. To be successful running a startup, you've got to stick with it through thick and thin. And there will be great times, and there will be terrible times. That's, unless you're extremely lucky, that is going to be your life. And being able to look back and see interviews that people have done some months or even hopefully a year or two before we invest gives a lot of confidence, because for 2 reasons. One, you can see that they've stuck at it for a long time. Like you were saying, that means, okay, I can see now that this person really wants it. And 2, hopefully the things that they were saying about their business a couple of years ago are consistent with what they're saying now. And then you can look at it and go, okay, so this person had an idea and they've largely delivered on it.
Yeah, super agree. Also, what I would like to do today with you is I would like to invite a couple of founders to talk to us just for a couple of minutes. And I will invite them after discussing with you one more question. I'm just like giving them the heads up to onboard to StreamYard so that I can let them in a couple of minutes. One more question that I want, or like one more topic I want to discuss with you is Moldova as such, is our country. Let me start a bit from more far away. Like, how much are you looking at the country where the startup, the company is incorporated in order to decide to invest into it or not? So are you investing only in companies based in UK, or are you looking as well outside of the country?
So what's important to us is not so much where the company is registered, but more where the CEO and management team are located physically. And historically, so pre-pandemic, we were, very insistent that the management team needed to be in the UK. We've relaxed that a little bit now, but it is still a strong preference of ours. When companies that are at a very early stage, then being proximate to the management team, so you can get in a room and meet and have kind of full high bandwidth communication, maybe go out for a drink. All of these things are really helpful in building a strong relationship, navigating the difficult times together, and being able to give great advice and help the business.
Okay. And speaking about Moldova, like, have you heard of Moldova before? Like, what do you know about Moldova?
Yeah, I have heard about it, of course. And I have a picture of it as a small Eastern European country, but I don't know much about it at all. I've never been there, unfortunately.
That's okay. You're very welcome to come and to visit us. We'll be happy to host you here. Has any of those thousands of applications that you've received come from Moldova? Do you have any clue, an idea?
I don't know. Probably, but I don't know.
Okay. What do you think, or maybe if I can ask you for a recommendation as a community builder in Moldova, where we have no venture capital company, so we don't have any one of those. We do have several business angels initiatives. The largest investments done locally by local investors through business angels network was a bit over 100,000 euros. Actually, one of the founders who raised this is going to join us just a little later, Emil from Bloom Coding. What I would like to ask you is about, like, what recommendation would you give to us as community builders to do in order to support the community of startups, to help them grow? Because we have like many options, what we can focus on. For example, one of the directions could be to build a venture capital company, to help raising the funds and to focus just on the financing. But then we were actually discussing this in the last couple of weeks with the board members from Startup Moldova, Eugene from Parkopedia, for example, and we are still thinking like what should be the next big milestone that we are looking at, because we can build, for example, a venture fund. Let's say that we can do that and we can raise, I don't know, 100 million euros in this venture fund, but then maybe we don't have enough startups in the community to fund with this money. So maybe then we should be focusing more on building the capacity of the founders, of the future founders. What would you say? Of course, you have somehow a different background, but still we are speaking about the community of the startups. What would you recommend us to look at, to focus on, to help the community grow in Moldova?
Yeah, and the startup community in London wasn't very big when I started in this industry, whatever, I think years ago. So it's like this, like the more VCs, the more money you have, the more entrepreneurs you get, and and so you're got to try and juggle both up at the same time. So without knowing a great deal, so this is the caveat, but without knowing a great deal about your local situation, but if there are no venture firms there, then I would think getting a venture firm there is probably a really good first step, because that then gives investors a lot of confidence. If you've got people permanently working in that venture firm who've got portfolio companies who've got money, they can then start to build stronger connections to London or other kind of funding hubs where you can then get more money flowing into the local ecosystem. But to your point, choosing the size of the fund is, you want to match that with the size of the opportunity that you have in Moldova. So it doesn't need to be a 100 million fund. Maybe it can be a 20 million fund, or maybe even a 10 million fund. Maybe it should be 50. Those are the ways I would think about it.
Okay.
And what you see in a lot of nascent ecosystems is the early stage, the first funds in the market, they don't do kind of pure play venture in the way that, say, Forward Partners does. They're a bit broader. So they'll do some pure play venture, but they'll also put some money into some later stage bootstrap companies that are maybe more private equity style deals. And that's the way they kind of make their models work at the beginning.
Actually, I just realized now that by coincidence, the 3 startups who will be joining us one by one further, they have all fundraised through different ways. So Bloom Coding went through like classical investors. Fagura has the experience of quite good examples of crowdfunding. So they've closed the crowdfunding round through Seeders a year ago, and they are just starting in a week or two the next round of fundraising through a crowdfunding platform. And then we have Andy from Index, who is a bootstrap company that has really reached like large dimension and has a huge team of people working there, but as well, they will tell a bit more about that. But I just realized like all 3 of them went through very different paths at fundraising the money and growing. So if you allow me, then I will invite them one by one. Emil, are you ready to join? Because I see you are online. Just please connect your camera as well. Super. Hello.
Hey. Hi.
Amsterdam.
Hey, Nick. Hi, Natalia. Doing pretty good. Nice energy. Excited to get to share about Bloom Coding. And it was really interesting to hear your conversation. In fact, there's so many things I'd like to share our views about on. There's not a lot of time. So, yeah, Natalia, so should I just shoot into like telling about Bloom Coding? Yeah.
Maybe I'll just like just 1 or 2 sentences just to say what I've asked the guys to do is that they will just do like a super short elevator pitch. What are they working on? So like up to 1 minute, and then they have the opportunity to ask you one question, whatever they think is relevant for them at this moment. So Emil, you have the floor.
Okay, cool. So we have built a digital coding school for kids. It's unique of its kind. It's becoming the category leader in the CEE. We're closing 1 million in our seed funding now. It's the third biggest funding round executed in Moldova. Not the biggest seed, as we've had the biggest pre-seed of 100K, completely local. We've scaled 300% year on year compared to October last year. So we crossed 500,000 in ARR, more than 1,000 paying monthly students taking classes every week. So we're scaling up. We're developing a unique approach in the sense that we are the only ones worldwide to send home hardware. So our children get an augmented reality cube that they use to experience projects that they do during the lessons. That's a completely unique take in the market. It's really capturing it boosts the interests of the parents and the engagement of the children. So we're about 20 people now. We're adding 26 in the next 18 months. We're hoping to reach 2 million ARR. That's our ambitious plan. We're definitely going to cross 1 million. It's very exciting over here. We're very happy to be building a very successful Moldovan startup story. And yeah.
Very cool.
That's a little bit about Bloom Coding.
Cool. And so do you have a question?
Yeah, so I guess now I should be asking a question. Yeah, so I did. I looked at your portfolio yesterday, and just really congratulations. There's some really interesting, successful stories and exits in your portfolio. So what I'm just curious is, what is your sweet spot in terms of exits? What's the current exit environment in the UK? Are exits happening? What's the M&A activity like? And I'm also really interested in secondary sales. How often do you see startups doing secondary sales in their Series B and Series A maybe? And who are usually the buyers? Is it family offices or PEs, or is it the venture capital firms? And what does it take to get that do a secondary sale? Yeah.
Got it. Okay, so exit markets are pretty depressed right now. It's like this is the worst macro climate actually I've ever worked in, right? In 22 years in this industry or something, and so it's brutal. People acquire businesses, companies acquire other companies when they're trying to grow, when they're feeling confident about the future, and most people at the moment are more worried about how they stay afloat even, and so it's not an environment where many acquisitions are happening, but some still are. So we had this is not a UK company, but you probably saw that Adobe acquired Figma for 20 billion, largest ever private private transaction, private M&A transaction, and so things are happening, but they're just thin on the ground right now. And if
I just heard that it's a great time for you to buy out your competition because.
Well, so that every cloud has a silver lining, as an expression we have in the UK, and so yes, if you can, so what are we advising our portfolio companies to? I think what every good VC is advising their portfolio companies now is to make sure you're well resourced. Make sure that you are making your resources last for as long as you can. Ideally well into 2024, and if that means growing more slowly than you would like, then you should grow more slowly than you would like, because your competitors are, a large number of them are going to go to the wall or just really struggle, and then you might be able to buy some of them. So one of our portfolio companies is, we've got a deal that might close in the next week where they're buying out one of their competitors for what we think is hopefully an attractive deal. But if you think about Bloom Coding, this is your one big bet. The time you want to exit that is not now, right? Not when valuations are depressed. So this is what the founders in our portfolio were saying to us. They're going, look, the ones that were thinking of exiting in 2023 and 2024 is saying, look, I still want to do that, but only if the markets recover. Secondary sales quickly. So increasingly common at Series B and Series A, particularly last year.
Series A, yeah.
Yeah, it's starting to happen at Series A much more. But But I think we're going to see less of that this year as markets are tighter. And most often you see it when rounds are highly competitive, people are fighting to get in, and so companies trying to raise 10 million, and there's investors saying, "Oh, I want to put in," and so you say, "Okay, I'll raise 10 million, and then we'll do 2 million of secondary."
Yeah, I get it. Thank you so much, Nic. Thank you so much.
Cool. All right. Nice to meet you.
Super. Thank you, Emil. This was Emil Bloom Coding connecting from Amsterdam. And from Amsterdam, I believe we're going to Romania, where the next startup is located. That's one of their location. Christian, hello. Can you hear us?
Yes. Hi, Nic.
Hey, Christian. Nice beard.
Thank you. Cheers. Same goes for you.
Thank you.
Super, Christian. So tell us a bit about Fagura before asking your question, please.
Yeah, unfortunately, I'm not the CEO, but I'm the Chief Operating Officer, and I will quickly run you through a summary of Fagura. So we aim to build the first community digital bank in Central and Eastern Europe to allow anyone, either abroad or at home, to be able to invest, borrow, or transfer money easily. Now, we started in Moldova as a crowd lending platform and a marketplace, since you mentioned that's an area of your focus. And we are currently expanding into Romania under the new European crowdfunding regime, something that existed in the UK for a long time, but didn't exist in Romania until recently. And on top of this, we want to add digital banking operations. So like being able to issue virtual cards, offer IBANs to our customers. And we're doing this to further extend our geographical footprint and to cater for the requirements of the European diaspora. And that's essentially 25 million people who live within Europe, actually, but at the same time they are away of their homes, and we believe they're all in demand of the services of a community digital bank to be able to invest in the local ecosystem via a crowdfunding sort of platform, but at the same time transfer money to relatives and friends. We estimate the market to be around 150 billion euros, and that is just Europe. The global market should be at least 10 times bigger. We're excited about this. Obviously not the best time, as you rightly mentioned, to raise money, but we just happen to be doing so. As Natalia mentioned, we ran a crowdfunding campaign on Seedrs last year, and we ended up at the 2.3 million euros post-money valuation. And we are currently opening a new round as of next Tuesday at a 5 million pre-money valuation. So yeah, it would be great to connect, and who knows, maybe one day have a proper discussion on top of what we have today.
Yeah, very nice to meet you.
And I do happen to have two questions, and essentially it would be, because these are problems that we faced in our existing fundraise. How do you go about investing in geographies you haven't necessarily invested before or are not very familiar with? And the second question would be, what is your preferred method of valuation when it comes to early or late seed investments?
So investing in geographies we don't know is challenging. So we far prefer to invest in the UK, and the principal reason is that we understand the markets. As particularly forward partners, we think that what we're good at is working out whether customers are going to buy a product or not, taking market risk. We less like to take technology risk, technical risk, and so taking market risk requires an understanding of the market, requires an intuition for the customer, and the further we get from home, the more different the geography is to the UK, just the riskier it gets, right? Like we look at this and go, how do we know whether someone's going to buy this or not, right? We just don't know the customer. And we're not alone in that. the way that people get around, so we're quite strict on not doing that very much, but the way people get around it often is to invest with a local partner. So ideally a local VC that does have that local knowledge and can reduce that risk for you, or, absent that, some local angels. Another way is to get someone in your team who is very familiar with, so if you're trying to raise money in the UK, someone who's familiar with the UK market and is then able to talk eloquently to the differences between the two markets. And, because it's quite hard for someone who's based in Romania to describe the Romanian market to someone in London unless they understand the London market as well, because, you just don't use the same language ultimately. But it's not easy as the headline, I'm afraid, particularly at the early stages. And then what's our preferred method of valuation? So valuations is a slightly ridiculous business, actually, I always think, for, and this is as someone who's been doing this for all my life, really, my working life. So the right way to value a business is to think, okay, what is this ultimately going to exit for? How much money, how many rounds is it going to have to raise between now and then? So, so if I invest now and get 10%, by the time it comes to exit, am I going to have 8%, 5%, 2%? And then you think, okay, it's going to exit, and my 2% will therefore be worth something, right? And so let's say that 2% is worth £50 million. And then I look at the stage of this business and think, okay, how much risk, what sort of multiple return do I want to make? And then that allows you to come to a valuation. So that's kind of the scientific way to do it. But there's so many kind of guesses that you're making. How much is it going to raise? How much risk is there? So you do that, but it's a highly like that. So then the next thing that happens is, well, what is the market paying? So like, how many other people are going after this business? Does the round feel competitive or not? And then finally, the most absurd of all is a kind of rule of thumb that the dilution's probably going to be 10 to 30%, right? And so so if someone turns up and says, I'm raising £1 million, you're immediately thinking, okay, this is probably a £4 or £5 million valuation. That's the ballpark. And if you look at the business and go, like, it's 4 or 5 million, doesn't sound like it's going to work at all, then you might pass on the business very early on. So a good tactic so that's a tricky environment for founders to navigate, and a good tactic, and unfortunately this doesn't work with crowdfunding, but a good tactic when you're raising from angels and from VCs is to go out with a range. So if you say, like, we're thinking of raising 1 to 2 million for 10 to 20%, then you get a really kind of big range of valuations out of that, and then you get people's feedback. Oh yeah, 1 to 2, 10 to 20, I'm in that sort of zone. Or they might go, oh no, I can do near the top end of that, or maybe that's too. But by going out with a large range, then you can get feedback without anchoring yourself accidentally in a place that you might not want to be anchored.
Yeah, thanks a lot. It was very, very useful.
My pleasure. Good luck.
Thank you.
Thank you. We'll need it. Thanks, Natalia, for inviting us.
Thank you, Christian.
See you soon.
See you. Nic, before I invite Andy as well to join us, I just remembered something and I wanted to ask you. Someone was telling me, a founder actually, that it's much easier to raise $1 million euros than to raise 10,000. What do you think about it?
Yes, probably.
But it's so counterintuitive,
Yeah. It is. So it's definitely not the case that it's kind of like the more money you raise, the more difficult it gets. Like if you're talking kind of 10 or 20,000, then like if you're from a family that's got a little bit of money, then that's actually quite easy. If you're a family that's got no money, then that's really hard. But if you're talking to professional investors, serious angels, VCs, then, £10,000, £50,000, it's not likely to be enough money to really make a big difference to a business. And, there's no point in us making an investment unless it can make a big difference and the valuation of the company can rise a lot. And so yeah, so kind of getting over a kind of minimum threshold, certainly a few 100,000 is in the UK. That makes it easier, definitely. We will certainly never invest 10,000.
Super, thank you. So I would like to add now Andy. Hello.
Hi.
Andy,
Hi, Natalia. Hi, Nick.
Are you in Moldova?
Yeah, I'm in Moldova and it's dark outside. Yeah, and the weather is getting chilly as well. Yeah. Okay. So I saw what my colleagues were doing. So I will jump in. At Index, okay, we have a remote work platform. We connect the developers from developing countries with the technology product companies from developed countries. We want to create equal opportunities for these developers. So we digitize this geographic asymmetry, especially in the Southeast Europe, from where we are sourcing. We are alive for the last 3 years when we managed to create a platform that gathered a community of 8,000 plus developers. We have an 8 digits revenue. We have a very good EBITDA of two digits, approaching 20%. We are growing 2.5 times per year. And now we are a bit looking outside and thinking, okay, what is happening in this environment? And we are looking at some acquisitions and moving a bit from augmenting teams to building agile teams. So basically to go into the outsourcing business that, but not the model of Endava or Cognizant to have remote engineers. And what we need to expand our product team in the UK, where we are looking for data, AI, ML engineers and Web3 engineers. Why UK? Because myself and the CEO, we are Oxford graduates, and myself, I'm doing also doctoral research with the UK University, and this product team will work closely in an industrial research project with the university, and also for the sales team in the US, because we believe the US will be less affected from this economic downturn than Europe. Yeah, that's it in a nutshell about Index. And yeah, now I need to ask the question, and I have many questions here. And okay, I will shoot one. If you believe this is the dot-com bubble, and how technology and the demand will play a role in passing through this turbulent environment.
So I think this is very different to the dot-com bubble. When the dot-com bubble collapsed, it hit all the companies in it really hard, right? And the reason it hit them all really hard is that they were all buying from each other, and their only customers were other dot-com customers, and so it, like, they all collapsed, and like revenues went to zero. Whereas imagine the case for your business, and certainly you look at any number of listed technology businesses from Google, Facebook, Meta now to MongoDB, with some of my friends work. All of these are serving like lots of kind of real world customers. And so times are difficult, like markets, economies are going to shrink, revenues won't grow, revenues will shrink. Some companies will go under for sure, but it's for the tech world, it's going to be difficult, but not kind of catastrophic in the way the dot-com bubble works. So, and for many of the earlier stage startups, and this isn't true for more mature technology companies, but for the earlier stage ones, and maybe your business falls into this category. If you've got a great product, you're taking market share from some larger companies. Even if the overall market is shrinking, if you're taking market share, then you can still grow, like not as fast certainly as you might normally have done, but you can still grow. And so that's not disaster.
Okay, that's good. So we continue with acquisition. that will be nice. And we are looking to build a hybrid decentralized platform using Web3 technology. and we apply for an Innovate UK grant. Let's see how this will go, mainly for the industrial research part. Okay, thank you, Nic. It was encouraging to know. Yeah.
I should caveat, and I'm ever the optimist, but that is what I think.
Yeah, the same on my end. I'm an optimistic person, and I also handle the financing of Index, and that sometimes is tricky when you have an optimistic finance person. Okay, thanks. And thank you, Natalia, for the opportunity. Cheers.
Cheers. Have a nice evening. Bye-bye. Super. So that was like 3 of the startups that we have in the community. It was interesting that actually I didn't realize that 2 of them are not even in Moldova located right now, because they are extending to the other countries. So I'm happy that at least Andy is in Chisinau in Moldova. We are exactly at 1 hour. So that's the point where we should round up as well, because we started exactly on time, you joined exactly on time, so I think it would be respectful from my side as well to end as we agreed. Nic, thank you very much for talking to us. Thank you for sharing some of your thoughts, insights from leading a venture capital company in UK, and thank you for being open to just talk to us.
No, my pleasure. Thank you. Take care. Bye-bye.
Bye-bye.